Hello guys, good evening. So let's get started. Let's see what we can cover for today. So um so today we're our topic for today is how to trade using multiple time frame, right? How to trade using multiple time frame. Now I'm just going to show based on everything we have learned, right? Based on everything I've taught in all the parts from part one to I think part 17. Right. So I'm going to like kind of combine all of them and use everything, almost everything I've taught to show you how we trade. So this is how we trade, like based on what I've taught you, right? Based on what I've taught you. So with time, they will now move to the main strategy. But this is just another way to trade based on everything I've taught you so that you can see how I use all this, everything I've taught you, right? So now the first thing to do is, okay, before that, now I want to just say something very quick, right? And then we continue to business of today. So what I want to just mention is just something very simple, something that you can just keep at the back of your mind, right? That if they wake you up, it's easy to just say it. Like it's not something, it's something just the same way you know ABCD. That is the same way you need to know this, right? Or just the same way you know how to spell your name. That is the same way you need to know what I'm just going to say now. Right. So we have different types of traders. I actually never mentioned this before, so I'm going to just do it here now very quickly. So we have different types of traders, right? We have different types of traders. Now, number one, we is called scalpers, right? Number two is called day traders, right? And then the third one we have is what we call the swing traders, right? And then the fifth one is called the position traders. As I said, this is something you can just keep at the back of your mind, right? And just keep this at the back of your mind so you know that you know okay, which kind of trader you are, right? So now after I just explained this, we continue from the main business of today. Now, I say there are different types of traders, right? So the first one are called scalpers, right? The second one are called day traders. The third one are called swing traders, while the fourth one are called position traders. Now, the first question is who is a scalper, right? So if in case someone say, okay, I'm a scalper, what do they mean, right? By them saying they're a scalper. It means that now let me explain what scalpers are. Scalpers are people who trade in and out of the market, right? They just go within, like when they're trading, it's just within an hour, like they just go in and out of the market. Some even like each 2 to 3 hours, right? But their trades are always in and out. They only just go in and out, place trades, either hit stop loss or take profit, and they're out of the trade. Very quick trade, right? Their trades are very quick. So this is what scalpers. So scalpers are traders that trade just within 1 hour. Sometimes it can extend to 2 or 3, anyways. But they are traders who trade in and out of the market, like they just go in and out while trading, right? So they can just buy immediately after they have take profits, just one like very quick, just and going and coming in and going out of the trade. That's just what scalpers are. Now the second ones are called day traders. Now day traders, these are people who trade or hold their trades within one day, within 24 hours. That's day traders, right? And they extend to 2 days, 3 days as well, 3, 4 days as well, right? So these are day traders. So day traders are individual or they are traders who hold their trade more than an hour, right? They can hold for like, sorry, more than at least a day, 24 hours. They can hold also like 2 days, 3 days, 4 days, 5 days, right? So these are day traders. Why for scalpers? Scalpers can hold their trade even in a day, right? They can hold their trade 1 hour, 2 hours, 30 minutes, 15 minutes, 24 hours as well, even one day. They can hold that, but mostly their trades are just within 24 hours, right? So that's scalpers. Why for day trader, these are people or these are traders who hold their trade longer than like more than a day, right? So they hold their trade like 2 days, 3 days, 4 days, even five as well. Right, so that those are day traders. Now, for the third one, we have swing traders. Now, swing traders are traders who hold their position longer than the scalper and the day trader. Now, these swing traders, they hold their position or they hold their trades more than a week, right? So they can hold their trade for a week, 2 weeks, even a month, right? They can hold their trades even up to months, right? Like 1 month, 2 months. So these are swing traders. These are traders who hold their position long for a very long period, right? So they hold their position for days, weeks, months as well, even months, right? So they hold their trade more than a week, right? Even up to a month or even more than a single month, right? So those are swing traders. Now the fourth one is what we call the position traders. Now this position trader, these are traders who hold their trade longer than all the first three I listed, right? These position traders hold their trade for a lot of months and even years, right? A lot years, right? They can hold their trade even up to a year. So imagine somebody placing trade and that is going to take profits maybe after a year. So you can imagine how long it will take that person. It's just like the person is not even going to be concerned about what is going on after the person have placed their trade, put their stop loss, take profits. But what they usually do is normal now. They move their stop loss to break even and also be taking partial profit and they can hold it for months, right? So it's not like they'll just put their stop loss there and they'll wait until it hit TP. No, they always after the trade have gone like maybe weeks or months in their direction, what they will now do is to move their stop loss to break even or to move their stop loss to take partial profits, right? To move their stop loss to take sharp profits while the trade is still running. So these are people that hold their trade for months, for even a year, right? So these are position traders. So that's just what I want to mention now. Then we will now continue what we have today, right? So let me just do this. So what we have today or what we're talking about is how to trade using multiple time frame. Now let me just switch books. Let me go to another pair. So let's say we want to trade USDJPY, right? So let's say this market wants to trade USDJPY. Now, the first thing you need to do, so let me just clear my chart. Now, the first thing you need to do is to, right? Now, okay, so before I talk about that, let me say, now how to trade using multiple time frame, how to trade using to now you hear people say something like top-down analysis, anyhow you choose to call it. But how to trade using multiple time frame. Now I'm going to say it's divided into three. We have one we call the higher time frame, right? We have the higher time frame. Then we have the lower time frame, and then the other one can say micro time micro time frame. So these are the let me just say will I say they are classified to three or anyhow. But I just want to explain some. That's why I'm bringing all this. Right? They're not really important. These things that I'm writing up here. This higher time frame, lower time frame, and micro time frame. Just understand the concept of what I want to explain. So how to take using multiple time frame. Now we have different time frame. I've explained what time frames are, how you can use time frame, right? So we have different time. You can see this is 12 months, 6 months, 3 months, 1 month, 1 day, 1 week, 4 hours, 3 hours, 2 hours, 1 hour, and so on and so even second as well. So I've also show you on the video on how to use trading view. I showed you how I favorite my time frames, right? I'll show you how I favorite my time frame. So if you want to favorite your time frame as well, you can see it here, right? So you can see I favorite my 1 minute, 3 minutes, 5 minutes, 15 minutes, 30, 45, 1 hour, 2 hour, and also a 4 hour time frame as well. So let's list some higher time frame here. Right? So let's say we have like 1 week, like 1 week time frame here, or can even put day, 1 day, right? And then the second time frame here on the higher time you can put 4 hours and you can also put 1 hour. Now this is just depends on the kind of trade that you are, right? This is just depends on the kind of trade that you are. So the next one here on the lower time frame, you can put the 4 hours, right? You can also put the 1 hour. You can put the 15 minutes, we don't need 1 hour. You can also put the 15 minutes time frame here. Guys, don't forget, okay, just because you see I'm not using the 30 minutes or 45 minutes, you can also add them here as well. But I'm just trying to I want to just make you guys understand something. So the other one, I can put something like 15 minutes. That's 15 minutes time frame. I can put the 5 minutes time frame. So I can even put the 3 minutes if I want to, or I can just remove the 3 minutes. Doesn't really matter. I just want to explain a concept here. Now, this can also determine based on which kind of trader you are, right? Which kind of trader you are. But I'm still going to show you um how I can trade using this multiple times and based on what I've taught you, right? So now I'm going to write something now on the higher time frame. What we mostly use the higher time frame for, guys, please pay attention very well. What we mostly use the higher time frame for is to look for the direction of the market. Right? There are some people that use months here, right? So don't mind me because I'm using 1 week or 1 day here. There are people that use months here to look for the direction of the market, right? So I'm going to type direction here. So direction here. So please just listen carefully to what I'm saying, right? So the higher time frame are just mainly time frame that we use to view the direction of the market, right? What is just for us to identify the direction of that market on higher time frame. This is what the higher time frame is meant for. As I said again, it just depends the kind of trader you are. Right? There are some people that look for the direction of their market, maybe in 3 months time frame, right? They use 1 week, but they not enter maybe on the 1 hour. They look for their entry maybe on the 1 hour, But as I said, the higher time frame is to look for the direction of the market. Please put this in mind. Look for the direction of the market. I'm stressing this in too much. So please just listen carefully. Now, the second, which is the lower time frame, is what we use for analysis. Right? As I said again, it just depends on the kind of trader you are. Right? It just depends on the time frame you are. And so here is this where we start our analysis. Right? We start our main analysis from here. Right? So then the third one is what we call the entry. So these are just the three things you need to do in the market. The first one is for you to look for the direction of the market. The second one is for you to analyze your chart, analyze the market. And the third one is for you to look for your entry, to place your trade either for a buy or for a sell. It's as simple as that, guys. It's as simple as that. So these are just the three things you are going to be doing in the market. Look for direction of the market. Always look for the direction of the market. What is market currently doing? Second, analyze, right? Analyze. Fundamental analysis, technical analysis, analyze. Third one, look for your entry to place your trade, either for a buy or for a sell. Now, under this direction, right? Under this direction, let me see how fast I can watch this. Under this direction, the thing you need to do now is to look for, as I said, it also depends the kind of trader you are, or what is your trading style, right? What is your trading style? What kind of trader are you? This is where we determine all using all this time frame as well. So now the higher time frame I say is mainly for looking for direction of the market. You can actually remove this 1 hour. You can remove it and just leave the 1 week, 1 day, 4 hours. So I say there are people who use months, 3 months, 2 months, 1 month. It just depends on your trading style, right? So I'm just going to leave the base of this video to explain this thing clearly. So first one is look for the direction of the market. Now, what you do on the higher time frame is to look for the direction of the market. Now, how are we going to look for the direction of the market? Now, the first thing to do is to identify the trend. Please keep this in mind. The first thing to do, identify. I might not write everything here, right? I might not write everything here. So the first thing to identify the trend. That is the first thing. Identify the trend on higher time frame. So as I'm writing this, I'm also going to be applying it here. So what I usually do is to go to the 4 hours, right? But if I do not see the direction of the market, right, on the 4 hour, what I just do is to switch down maybe to 1 day to just have a clear direction of what the market is doing, right? Just have a clear direction of what the market is doing. So it just depends on what is really going on, right? So for analysis, can we see this? This is for entry. This is for direction. This is what time frame. This is for this. So you can see I also put the 4 hour here. As I say, just depend on not there. So the first thing to do under the higher time frame is to identify the trend. Now you can see I'm on the 4-hour time frame here, right? So let me make my screen a little bit bigger, right? So now if you look at I'm on the 4-hour time frame, right? You can see this is my 4-hour here. You can see this is my 4-hour. I'm on the 4-hour. You can see 4 hours. So I'm on the 4-hour time frame. Now this is just what I will do. I'm going to zoom it, right? I want to identify the trend of the market, right? So let me just zoom it out. Now, if you look at now, what would you call this trend? Now, what is currently going on? Now, most people say, oh, the market is in a downtrend. Yes, well, no, it's not really in downtrend. Maybe they'll say, okay, because of this. So if I can see, if you plot your trend line, you can see that the market is actually going down. But that's not really what you should be looking at. Like, yes, the overall market, right? You can say, okay, it's a downtrend. The overall, if you want to say so, no problem. So you can also, if you are not clear with it, you can also move to the daily time frame, right? So if you look at the daily time frame, overall, the overall trend of this market, right? The overall trend of this market is an uptrend. The overall trend, you can see the overall trend, this is 1 day time frame. You can see the overall trend is a downtrend. So it's an uptrend, right? But now what we want to do is we want to use the 4 hours because I usually use 4 hours to start my this. But in case I did not see the trend of the market in the 4 hours, I cannot check the daily time frame. But what I do first, this will show you how I trade based on what I've taught you. Based on what I've taught you, but this is not really my strategy. This is just based on everything I've taught you so you can apply it. Right? So this on the 4-hour time frame. As I said, the first thing to do is to identify the trend, the current trend, right? So the current trend, now you have to check the current, what is currently happening. That's the first, I think that's what I should even put in, not just identify the trend. Identify, yeah, you might not have it in mind that, okay, market is doing this, like the overall trend, but first of all, you identify the current trend, right? Identify the current trend, right? What is market currently going on? Now, this is on the 4 hours time frame. That means each candlestick here represents 4 hours. Right? It took 4 hours for every candlestick on this time frame to form. So what I said is identify the current trend. Here, the current trend, right? So now, if you look at this trend now, what will you say is currently going on? Is the market in a downtrend or an uptrend, right? If now I said every candlestick here, because on the 4-hour time frame, every candlestick here represents for 4 hours. So now what you're going to identify the current trend. Now, if you look at this current trend, what will you say is the current trend? Okay, so the current trend of this market is a bullish trend. If you don't know what is bullish, you can just go out. I don't know. I don't know what to say. So the current trend now is a bullish trend, right? The trend is in an uptrend, right? It's in an uptrend because this is what market is currently doing, right? You will not go back and start looking for what is happening here, right? Because this is on the 4 hour. This way now is we are only checking for the direction of the market. That's the first thing. Check for the direction of the market. Now, the current direction of this market or the current trend of this market is in an uptrend because you can see that market is actually going up, right? Creating series of higher highs and higher low. This is market in an uptrend. Now, the second thing to do now on this higher time frame, the current thing to do on this higher time frame is to find major key levels. Right? This is the second thing to do in the market, to find the major key levels or identify the major key levels or mark out your key levels. As I said, major. Now, for me, if I can say major, that means there are also minor key levels. And minor key levels, you can see those minor key levels are in other lower time frames, like not on the 4 hour. You can look for your minor lower time, your minor key levels, maybe at 1 hour, 15 minutes, 45 minutes, or 30 minutes, depending on which one you choose to, right? So now the second thing here is to find major key levels. Now we're going to be drawing our key levels, and you know what are key levels. I don't need to explain what are key levels here, right? So key levels are just your support and resistance. That is key levels, right? That is key level. So the second thing to do is to find your major key levels. Now, because we're on the higher time frame, if you look like in a 1 minute or 3 minute time frame, price can actually bounce off a support or a resistance level, right? But when and then reverse back, but on major time frame, right? the move will be very strong, like the zones will be very strong to hold the market, right? The zones will be very strong. But in 1 minute, price can actually break a resistance, or just price can reverse from a resistance level. But for major time frame, price will always want to expect those key levels, right? So the second thing to do is to then find your key levels. Now I'm going to be doing my key levels. I'm going to look for my support and resistance level, right? Where I believe that price can possibly reverse from, right? So let's say I'll do here is either to use your rectangle tool or your horizontal line. It just depends on how good you are, and then you use it. But me, if it was me, I'll just use my horizontal tool because I'm used to it, right? Because I'm used to it. But since based on this video, I'm going to do something like this, right? Now, this is a support level, right? Because you can see price, this is a strong major support level because price actually came to this point multiple times. So you can see price came here, went up, came here, tapped there, and then price broke it, right? So this is just like a fake breakout, and then price went back up again, tapped it, right? So you can see here is a major support level. So I'm going to only write that down. So yeah, I'll put a support level here. Right, so this is on our key level now, major support or support level, right? So we're finding this now, finding us we're finding our key levels, major key levels. So this is a support level, right? And then we can call here a resistance level as well. So this is another major resistance level, right? Right, and price actually broke it, but it seems like price is pulling back, right? So this is our resistance level here. So this is our resistance level, right? So this is our resistance level. You can see this is our support level, right? This is our support level, major support level, and then this is our resistance level. Because you can see that price bounce off of that level. So this is actually a strong resistance level. Because anytime price goes up, it gets rejected back down. Goes up, it gets rejected back down. And at this point, this is where price broke this level. Right. So when price broke this, is kind of putting back small. So we're going to see if this one is it going to hold this price from going up, or is the price going to break this resistance level to the upside, right? So now, if you move again, we also have another strong resistance level here, right? We also have another strong resistance. We also have another strong resistance level here as well, right? So, we have another strong resistance level as well here, right? So if it was me, as I said, I'll just use my this thing, right? Just horizontal line, but because of this video, so now you can see what identify our support level is our major resistance level as well. So now, next thing also you need to do is to identify, okay, before that, you can actually add something here, right? You can add, let's see, if we're going to add, you can add something like identify, identify the recent high and lows, right? The recent high and low of the market, right? So this is the recent high, right? These are the recent high here. All here are the recent. So this was the recent high, and this was, you can say this is the low, because if you look at market was getting going up, then you can see something like this, right? So this is our recent high here. This is our recent high. This is our recent low. So you can do something like this. So this is just like this is just different way you can trade based on what time. You can do something like this. Mark this low, right? So this is our low, right? I can do something, and then, as I said, so you can just add this third one based on what I'm trying to say here, right? You can, as I said, you can. If you like, you don't need to, right? But I'm just adding it based on this video, but if like, so this is our recent low, this is our recent high. Identify recent low and high. So if price is in an uptrend like this, as you can see, also of higher highs and higher low. And now let's say market is currently at here. Now you cannot mark here. You cannot mark this point here as your recent low, because that's where market is still at, right? But here is your recent high, right? And then here is your recent low, right? So this is your recent high, this is your recent low. So if it's on a downtrend too, if market is on a downtrend, this was so if this thing is like this and the market is maybe is pulling back like this or like this, you cannot identify here as your recent high. Now this will be your recent high, right? And then this will be your recent low, right? But you cannot identify here as your recent high because this is where the price is, right? So now you can see we have identified our recent high and our recent low, right? So now what we are going to do is to move to the next time frame, the lower time frame. So this what we did now is on the 4 hour time frame. Now we can now move to the lower time frame and use. So let me just delete this 4 hours here. Just depend. There are some people, if you are using, maybe you are trading with 1 week or daily, your higher time frame, then on your lower time frame, you can put the 4 hour time frame here. But since we are using the 4 hours, then we'll go with the 1 hour, right? We'll go with the 1 hour. So now the for the lower time frame is where we do our analysis. Now you can see on the we have checked the on the higher time frame, we have looked for the direction of the market, and we see that the price is currently in an uptrend, which is to identify the current trend because we're looking for our direction. Now the current trend of the market is in an uptrend. We have identified number one. Second is to find your major key levels, and we have plotted out our key levels here, right? Now, the reason why I plotted this key level is because price is around that side, right? So if price was here, I will not come and plotting as my key level. I'll just look for the recent key levels, right, and plot it in the market. Now, the third one is to identify your recent high and recent low. So this is my recent high, this is my recent low. Now, we'll move to the next one, which is where we do my analysis, right? So this way we're going to do our analysis. Now, we go to the, since we started from the 4 hours, now we're going to go to the 1 hour time frame. So now this is me switching to 1 hour. You can use 2 hours as well, but this means switching to 1 hour, right? So I'm switching to 1 hour. So now you can see this is actually a resistance level, right? So price is broken and it seems like price is testing that level. So we are going to see if this level is going to hold price continue going up or it's going to break it and push continue going down. So need to wait. So this is our recent high. Now this is our recent low. Now what you need to do on this lower time frame where you are going, where you are checking for, where you are looking for um so where you are looking for our, where you are doing your analysis from, now there are also things under it that I need to just list. So now when you're doing analysis, you need to scan for trading opportunities. So the first one is to scan for trading opportunities, right? Put that down. Trading opportunities. Then the second one you need to do is to find your supply and demand zone, right? Then the third one you need to do is to, okay, I've not taught you other blocks, right? I've not taught you, but I'm just going to add it here. I've not taught you about this one. On the main strategy, I'm going to teach about other blocks. The fourth one is to maybe 10 lines. We also have other tools we can use here, right? We also have other tools, but I'm just giving the main important things that you need. I will not, there's also another one, Fibonacci, but you don't really need it on my strategy, right? You don't really need it on my strategy. So now the lower time frame, which is our analysis, first thing you do is scan for your trading opportunities. Now, scan does not mean you should just start plotting. No, scan, just look at what's currently happening. Like this is you scanning tool, right? You're scanning through something for your trading opportunities. Then, so it's look for your support, supply and demand, right? So you can see on this lower time frame I put, you can see I put 1 hour here. I also put 15 minutes. So you can use from this 1 hour, 45 minutes, 30 minutes, 15 minutes, you can look for all these things that I wrote down here. So in case you did not see it on the, in case you did not see it um, on the 1 hour, you can check 45 minutes, you can check 30 minutes, you can check 15 minutes for all this here, right? So, and also you can see I put here, I put something like trend lines. You can also actually do your trend lines even from higher time frames. Like, so if I was even doing it, I can just do something like this, right? I can take my trend line to plot it because I'm seeing more like a trend here, right? I'm seeing a trend here, right? And this trend line can also act as support and resistance as well. So I'm seeing trend line, so you can see I'm seeing a trend line here. So I'm expecting, like I can be expecting that maybe price can do something like this, tap here and then probably continue going up. This is what I can be Like I can be expecting, not expecting, I'm predicting that price can do something like this, but let me delete it. So this now, this our trend line. I'm just doing my trend line. You can actually remove it if you don't want to here. So after I scan through your trading opportunities, the second thing I say is to find your support, sorry, your supply and demand. Now, if you not see your supply and demand, then you can actually switch. Now, this way you switching between time frames. Like you can start switching between time frames, right? So um now, yeah, I'm not seeing anything like maybe supply and demand here or any this thing that is going to make me buy. But I told you that this is our trend line. So you can see anytime price comes, it's always tapping this trend line. But you can see, I'm expecting that price might do something like this. Like there's possibility that price can do something like this and then continue going up. There's possibility because this trend line will not serve as a support level, right? A support level that is supporting it from going back down. So this is our recent high, this is our recent low. Now let me go to the 45 minutes. Now 45 minutes seems like still doing the same thing. Sorry, not really seeing anything here. So I'll go to the 30 minutes. Not still seeing anything. I'm just seeing that price is kind of pulling down, right? Price is kind of pulling down. So let's go to the 15 minutes. Now the same thing here, right? The same thing, and it seems like market is creating somehow like a lower, a downtrend, somehow like a lower highs and lower low, right? Lower highs and lower low. So this is what I'm kind of seeing in the markets happening. But as I said, I'm also expecting that price might come here, tap around this trend line level, and then to the upside, right? So this is what I'm seeing. So what you can also do is now you can um um you can zoom out. Maybe you can use the 45 minutes or 30 minutes or 1 hour. Then zoom out to see if there are any major levels here or place that you think that price can actually come and bounce based on what is happening here. Right? Maybe where price can bounce and then continue going up or they continue going down. So let me see. I'm not really seeing anything here. I'm not seeing anything here. So I'm not really seeing anything here like that. But yeah, we can use this 30 minutes time frame. I'm kind of seeing like a other levels here, right? And I'm seeing other levels here. We just have like less than 8 minutes. Let's see how far I can cover to have kind of course. I can actually do something like this. Just use this line and maybe draw something like this. I can also not do it because here can be like a level. So you can see this was price came at to broke it, came back down. You can see here can be you can see acted dot com. So I can draw that here. So let me just now I'm here. So now you can see I've drawn two things, right? That level there, which is a support level now, and then my trend line. So now what I'm doing is to wait for price. Now don't watch the market. Don't because you sit here, okay, you want to enter sell here and thinking that you now when enter sell here, which is you now want to take profit. And guys, please no. Always wait for market to come to your zone. After just wait for market to come. So this is what I'm expecting, as I said. I'm expecting that market to pull down here, right? I'm expecting that market to pull down here before going up, right? Maybe to the next key level, right? So this is what I'm expecting. So what you do is to wait for price to come to that zone, right? So the next thing again we're talking about now, let me go back on the other micro time frame is let's go back. So you can see this, we're doing our analysis here, right? And we have done most of the things here. So we didn't see our supply and demand. So don't force it. If you do not see, don't bother about it. Don't try to force things, right? Don't try to force things. Now the next this network. So the next this thing here on my micro time frame is they say 15 minutes, 5 minutes, or even 3 minutes to look for our entry. Now this is where you can see showing that for us to look for entry, right? It's for us to look for entry. Let me just do this first. So it's for us to look for entry, right? So you can see micro time frame 15 minutes, 5 minutes, 3 minutes. So this way we want to look for our entry signals. So under this place, what you need to do now is let me just write that very quick. Is for number one, let's say look for let me see if I can put that here. So here is to look for confirmation, confirmation, confirmation entry, right? Why the second thing you need to do is to observe your observe Japanese. I don't know how to say Japanese, guys. So, guys, Japanese candlesticks. Right. So look for your confirmation entry. I've explained confirmation entries like your candlestick patterns, chart patterns, rejection candlesticks, multiple candlesticks, like all those things, right? So I don't need to be explaining all those your candlestick confirmation chart pattern. I don't need to be explaining all those things for you, right? So this is our recent low, this is our recent high. So this point that I draw is more like is a strong level there, or where prices have rejected from multiple times. You can see I do here as a resistance level because you can see price came here, tap it, broke it, came back here. So that's why I do this point. I can also do something like this. Right? So instead of me using this line, this single line, what I can do, I can also use this. I can do something like this. It just depends on the person, right? It just depends on the person. So if I've taught you other blocks, I will have explained other blocks directly from here. But because I've not taught you, that's why I'm not bringing and anything like other blocks here. Right? That's why I'm not bringing anything. So if you are using something like this, talk, depending on you. If you don't want to use something, it all depends on you, right? So it just depends on you, as I said. So now after I have drawn this, so now we're looking for our entry confirmation candlesticks, like our chart patterns, um, chart pattern, now double top, double bottom, inverted head and shoulder, other things again. The candlestick pattern, shooting star, hammer, pin bar, morning star, evening star, and all of that, right? So now, as I said, this is what me I'm expecting that price will do. I'm expecting that price will come back, tap this level here, which is a somewhat like the resistance level, sorry, support level, and then on this third line that is also acting as a support level to the upside. So what you just need to do here, you not just enter the trade, like you're not placing any order here, right? You are not going to place any order here, right? Wait for price to come around this point. If it's giving you now this confirmation that is going to buy, then you can look for at least 2 to 3. So you can see here can be our first confirmation, or first confirmation that price is in an uptrend. Second confirmation, yeah, we have a support level. So we have a trend line that's acting as a support level because we are expecting that, or predicting that price will come and tap this our trend line to the upside. And I also draw this another this thing here, support level. So you can have like 3 confirmation or 2. So now what you just need to do is to wait for price to come to this level. So if you want to stay on the chart watching it, it's okay by you, right? If you want to stay on the chart watching it, that is left by you. But if you don't want to stay on chart, I'm not saying you should set order yet. Like if now I say you should set a pending order, like you can just set a buy order here, buy limit order here, right? Put your stop loss maybe below your distance and then target the next high, right? Target this your key level or even above it. Just target or target 1:2 easily, right? 1:2. You can see 2:13. This is 1:2. That means if you are risking this amount of money to make this 2 times your money, right? Just easy 1:2 is to what ratio is. That if you are setting a limit order, but if you are going to stay towards the chart, please don't get frustrated because of what is happening. Try to see, okay, how many confirmation do you have? If you have more than 3, very good. Take the trade. If you hit your stop loss, fine. If you hit your take profit, fine. If you hit your stop loss, it means that yes, you followed your trading plan, like you followed your strategy, but the trade still went against you because there's no strategy that's 100%. There's no holy grail strategy. Right? There's no holy grail strategy. If your strategy, there's no strategy that works 100%. There's always loss in every strategy, right? There's always, so don't put yourself under unnecessary pressure. So, but this is what I'm expecting to see in the market. That price can pull here, maybe come to this level and then start going up like this. So this is just what I expect. So what you can just do is to wait, right? You can just, I also talked about moving average. So you can use different confirmations too. So you can see our moving average is currently above the candlestick, meaning that price is actually going down. But when the moving average starts giving us signs of no going below the candlesticks, it's telling you that okay, price might start pulling up, but don't just use that to enter your trade. Wait for other confirmation, candlestick rejections, your chart patterns, your candlestick patterns, candlestick formation. Just look for all those things, everything that I've taught you, or everything I've learned to apply here. So this way we'll stop here for today, right? So you can watch this video over and over again. We just have less than 1 minute. Watch the video over and over again to practice as much as possible, right? So this is how you switch between different time frames to trade. So now I'm doing on the 5 minutes, can go on the 3 minutes or 15 minutes. So switch between different time frames to trade. So this will stop for today, and tomorrow we're going to continue for the main final revision before the main strategy part. So you guys should be safe out there. So for my YouTube community, this is my YouTube channel.